Good afternoon, and thanks for joining us for a Tax Practitioners Board webinar. My name is Ashley Dowsard, and I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connections to land, waters, and community. I'd like to pay my respect to them and their cultures and elders, past and present. To begin, I have a few quick housekeeping messages. First, to obtain a copy of today's slides, you can visit our webinars resources hub at tpb.gov.au/webinar-hub. We'll also email you a copy of the slides. Today's webinar counts towards your continuing professional education, or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we will issue an attendance certificate to those of you staying on for the duration of the webinar. Today, we'll look at the new Code of Professional Conduct Obligation, false or misleading statements. We'll provide an overview of the requirements, the application dates for small and large practices. We'll share some case studies followed by a panel discussion with our experts, and then we'll finish by answering your questions. We also have Fiona and Vishnu from our policy and legislation team here to respond to your questions as we go. So please submit them using the Q&A. To find the Q&A, simply hover your mouse over the screen and a range of icons will appear on the bottom of your screen. You can also use the chat function to speak with other participants. We won't be monitoring the chat closely throughout the presentation, so if you want a response from us, be sure to use the Q&A. To disable any of these functions, simply hover over the relevant icon and unselect Show Preview. We have a lot of people online, so we may not get to all your questions. However, we will have an FAQ document available on our website following the webinar. Also, a reminder to keep your comments courteous and professional. Now, I'd like to introduce our speaker and panelists for today, Peter DeCure, TPB Chair, Jeanette Liu, TPB Assistant Secretary, and Tariq Kumar, the TPB's Policy and Legislation Director. Welcome, Peter. Over to you to start us off.
Thanks, Ashley, and it's good to be back to get 2025 up and running. And thank you to everybody for joining us today. Before we get started, I'd just like to thank everybody that's been participating in our webinar series, especially in relation to the changes to the Code of Professional Conduct. We really value the feedback that we get from all of you, and the vast majority of the feedback is very good. And I do note that we can't please everybody all of the time, but and for those of you that want us to jazz up the presentations a bit, we'll do our best to do that. But I remind you all that it is tax and it is regulation, so it probably won't be as jazzy as some things. But anyway, let's leap into today's session about the changes to the Code of Professional Conduct, and specifically in relation to false and misleading statements that are made either potentially by tax agents in their practice or by your clients. I understand that there is still some residual concern about these changes, and I hope today to help to clear up any of that misunderstanding or reticence. And I also would note again that we have worked very closely with all of the relevant professional associations and with Treasury and the Minister's Office to try and get the best possible outcome and give you appropriate guidance into how these new changes are going to work. Most of you will be aware that our final guidance in relation to the revised Code of Conduct was issued just before Christmas. So hopefully over the break and back to work, you've had a chance to look at that. So just starting with a little bit of background, as I'm sure everybody's already aware, this process started in 2019 with the independent review of the performance and effectiveness of the TPB and the Tax Agent Services Act of 2009. In August 2023, there was a package of reforms announced by government to assist in rebuilding people's confidence in the system and the structures that keep our tax system and capital markets strong, and specifically in reference to some misconduct in the system. This resulted in some amendments to the TASA and some additional obligations being included in the Code of Conduct, pursuant to the Minister's power to create these new obligations by way of a legislative instrument. So the reason we're here today is that the Minister issued a determination under his power issuing these 8 new code obligations. Skipping on to the next slide, the new code obligations, which are designed to assist in strengthening the integrity and accountability of the profession, and also very much focused on the creation of a level playing field for registered practitioners. So I think when we look at these, you'll understand that the vast majority of you in your existing practices and operations will already be very compliant with these requirements. But let's just go through them one by one. Firstly, an obligation to uphold and promote the ethical standards of the tax profession. Secondly, obligations in relation to not making false or misleading statements and what you must do about any false or misleading statements that you do make or that are made on your behalf or made by your clients. There are new provisions in relation to managing conflicts of interest in activities undertaken for government. There are new provisions, specific provisions in relation to maintaining confidentiality of dealings with government. There are new provisions giving increased specificity in relation to the keeping of proper client records. Again, ensuring that tax agent services provided on your behalf are provided competently. Obligations in relation to having appropriate quality management systems in your own practice, and obligations in relation to keeping your clients informed of all the matters that are relevant to them. As you can see, these new obligations align very closely with the existing 5 key principles of the Code, and they also leverage very strongly on the work of other existing regulatory bodies, in particular the Accounting Professional and Ethical Standards Board, which has developed and released substantial guidance material, and other elements of the Code build on well-known and understood tax and corporate law concepts that as tax practitioners, you'll regularly be advising your clients on anyway. So let's move into when these new provisions commence. For those of you in large practices, i.e. with more than 100 employees, the new obligations commenced at the start of this new year on 1 January 2025. For all other practices, those of you with 100 or less employees, the new obligations commence from 1 July 2025, i.e. 1 July this year. It's important to note that this also includes all new tax practitioners with 100 or less employees that register between 1 August 2024 and 30 June 2025 inclusive. This delayed application is designed to give the smaller practices time to develop and implement and update the systems that are required to meet these obligations. Now, let's move forward and talk about the guidance that the TPB has issued. As I'm sure you're aware, we've done what we can to ensure that all stakeholders have had an opportunity to submit feedback and to have a say on the final guidance products. We've done this by working with the professional associations and in particular through the Tax Practitioners Governance and Standards Forum. We've accepted a lot of feedback and done everything we can to make the guidance as practical and easy to consume as possible, taking into account the feedback that we've received. And I would like to thank all of those people who engaged in the process and provided their valuable time and valuable feedback. Hopefully you've all seen the guidance products that have been released. They're available on the TPB website and there are fact sheets as well as formal guidance products. I genuinely encourage you to review the products and to engage with our webinars as you are today to further your knowledge and understanding of these changes. We genuinely want to support those tax practitioners who on a day-to-day basis are doing their best to do the right thing. This includes providing reasonable time for you to understand your obligations and to assess their impact on your own practices and to make the necessary changes. So let's start talking about the specifics that we're here to talk about for false and misleading statements today. So I'd like to share with you a high-level overview of the requirements of the new obligation. Firstly, the obligations relating to false or misleading statements are outlined on these slides, but also they are legislated in Section 15 of the Minister's Code Determination. At the highest level, there are two key aspects. First of all, as a practitioner, you must not, in your capacity as a registered tax agent or BAS agent, or in any other capacity, make a statement to the TPB, the Commissioner, or any other government agency, or prepare a statement that you know or ought reasonably to know is likely to be made to the Commissioner or the Australian government agency, or permit somebody else to make or prepare such a statement that you know or ought reasonably know is false or misleading in a material particular or omits any matter or thing without which the statement is misleading in a material respect. I really want to stress this highlights the importance of your role as agents within the tax system, particularly when making representations to the Commissioner about your client's tax affairs or your own tax affairs. The nature of the obligation is simply one of truthfulness and integrity and is entirely consistent with the existing Code Item 1 obligations in relation to honesty and integrity. It's concerned with the material or particulars that are material in nature. So this means that a false or misleading statement where the particulars are trivial or minor in the circumstances would not give rise to a breach of this code obligation. Secondly, you will be required to take certain further action where you have made a statement or permitted or directed someone else to make a statement that has been given to the TPB or the Commissioner in relation to yourself or your clients, and all of the following apply. At the time the statement was made, you had reasonable grounds to believe that the statement was either false or misleading in a material particular at the time the statement was made, or omitted a matter or thing at the time it is made that made the statement misleading in a material particular. And you had reasonable grounds to believe that the false or misleading nature of the statement resulted from either a failure to take reasonable care in connection with the preparation or making of the statement, recklessness as to the operation of the tax law, or intentional disregard of the tax law. If the above circumstances have all occurred, then the requirements to take further action will arise within a reasonable period of time after you come to believe the statement was materially false or misleading. The action required will vary depending on the circumstances. So where the false or misleading statement has been made by you for an entity that is not your client, for example, about yourself or your own tax affairs, you are obliged to have the statement corrected. If you made or prepared the statement or permitted or directed someone else to make the statement for your client, you'll need to advise your client that the statement should be corrected and the possible consequences of not doing so. At this stage, your client may well instruct you to take steps to correct the statement on their behalf. We would expect that you and your clients would agree upon fees and other terms and conditions that are appropriate for you to make the corrections on their behalf. Where the statement was made for a client and the client was advised about correcting the statement, if you're not reasonably satisfied that the client has corrected the statement or otherwise explained the statement, you'll be required to withdraw from the engagement and professional relationship with the client. As well as withdrawing from the engagement, if you have reasonable grounds to believe the false or misleading statement was made as a result of recklessness or intentional disregard of the law, either by the client or by yourself or someone else involved in preparing or making the statement, and you have reasonable grounds to believe that the client's actions may have caused or will cause substantial harm to others, this could include their employees, taxpayers generally, the public, or the tax system, you will then be required to notify the TPB or the ATO, depending on whom the false or misleading statement was made to. I do note that this obligation to further notify does not apply in circumstances where doing so would pose an unreasonable risk to your own personal safety or to the safety of a member of your family, or a staff member would be at risk, or it would be otherwise unlawful under an Australian law to do so. When notifying the TPB or the ATO, you are required to advise, as appropriate, the client's full legal name and any other identifying information as considered appropriate in the circumstances. You're required to note that the notification is being made under or pursuant to Section 15 of the Code Determination. Confirmation that you have advised your client that the statement made to the TPB or ATO should be corrected and that you are not reasonably satisfied that this advice was acted upon. Relevant and sufficient information should also be provided to the TPB or the ATO so that they're in a position to make an assessment of the potential false or misleading statement and to decide if any mitigation action is required. This means you would need to provide the TPB or the ATO with enough specific information to assess if a false or misleading statement that has been made, for example, the relevant statement is contained in a company income tax return or a business activities return or some other communication. Section 15 does not limit you from providing additional information if you reasonably believe it is in the public interest to do so. It's important to note that you do not need to provide further evidence or take steps to correct the statement once you have made this notification. Lastly, there may be other actions you reasonably consider to be in the public interest in relation to the false or misleading statement. This will depend on the circumstances and could include providing additional information or intelligence to the ATO or the TPB, or providing relevant information to another registered tax practitioner in relation to the matter in response to an ethical letter. I'd like to talk through a couple of case studies now before we go to a quick poll. The first case study looks at the situation where a registered tax practitioner who made a false or misleading statement to the TPB without taking reasonable care. In this instance, Ella, a registered BAS agent, advised that she was covered by her employer, ABC Proprietary Limited's PI insurance. It became apparent that Ella was not covered by this policy. As such, the statement that she has made by ABC and Ella regarding their PI insurance was false. ABC took action to promptly update the policy, and ABC and Ella advised the TPB that the false statement was made and that the new policy details are now correct. Technically, ABC and Ella have breached the determination and code item 13. However, they have taken steps immediately to meet their determination obligations by taking all reasonable steps to correct the statement within a reasonable period of time and to notify the TPB. Accordingly, in these circumstances, the TPB has noted the breach but has decided to take no further action and simply issued a written caution to ABC. It is clear that, as in many instances, both Ella and ABC have done everything they can under circumstances when they became aware that they had inadvertently done the wrong thing. If we move on to case study 2, our next case study covers a situation where Don, who is a registered practitioner, considers that his client's actions may be inappropriate and may cause substantial harm to others. Don's a registered agent. He was reviewing the tax and financial records of his client, Phil, and Phil's company, DFE Constructions Proprietary Limited. In his review of the company's records, Don noticed statements that he'd previously prepared on behalf of the company and provided to the ATO were materially false or misleading, and that these statements resulted in underpayment of GST, and superannuation entitlements to employees. After carefully reviewing his records in relation to the services he's provided to Phil and to the company, Don suspected that Phil had intentionally provided Don with incorrect information, including falsified source documents, deliberately in order to pay less GST and to pay less superannuation entitlements to his employees. Don identified that he had made false or misleading statements in material particulars to the ATO on behalf of Phil and on behalf of the company. Don considered he had reasonable grounds to believe that the false or misleading nature of the statements resulted from intentional disregard of the tax laws by Phil. Given the seriousness of the false or misleading statements made to the ATO, Don contacted Phil on the same day and advised Phil, firstly, that he had identified the false or misleading statements made to the ATO and advising Phil that the statements should be corrected and that the correction should happen as soon as is possible. And that if the statements were not correct, it's likely that penalties would be imposed by the ATO should the false or misleading statements be identified. Don then offered to assist Phil for a fee in having the false or misleading statements corrected and negotiating appropriate payment arrangements with the ATO in respect of the outstanding payment amounts and any penalties that might apply. In response to this advice, Phil told Don he was not concerned about any penalties that might arise in respect of the false or misleading statements made to the ATO, and that should the ATO issue come up, he intended to simply liquidate his company and set up a new company in a way that the ATO would not be able to recover any of the outstanding debts or penalties. Phil indicated to Don that he had experience in these sort of arrangements and was confident that he could manage the situation and avoid any liabilities that might arise. So, taking into account Phil's response, Don was not reasonably satisfied that Phil would take any steps to correct the false and misleading statements. In addition to considering he had reasonable grounds to believe the false and misleading statements made to the ATO were as a result of Phil's intentional disregard of the tax law, Don also considered he had reasonable grounds to believe that Phil and all the company's actions caused and may still cause substantial harm to employees and creditors and investors of the company, and also to the public, including taxpayers generally, and the tax system, by virtue of not paying the right amounts of tax and being prepared to take action to avoid any penalties and interest. Accordingly, Don decided to and did withdraw from the engagement with Phil and the company, and subsequently notified the ATO about the false or misleading statement. In the circumstances, Don has acted reasonably and considered it was in the public interest to provide the ATO with additional information. This was to assist the ATO in looking into Phil and the company's conduct, as well as notifying the ATO about Phil's plans to avoid any liability that could arise should the false or misleading statements be identified and actioned by the ATO. In these circumstances, Don would not be in breach of the determination because he did not know or did not reasonably know the statements had been made on behalf of the company were false at the time the statements were made. Don also took appropriate steps as required to address the breach once he had identified it. So before we launch into the panel, I'd just like to hand over to Julie to conduct a quick poll for us, please.
Thanks, Peter. The poll's just going to pop up on your screen in just a moment, but what we'd like to do is see what you think about a registered tax practitioner who makes a false or misleading statement for a client. So what we'd like you to consider is the following scenario. So we have Jake, a registered BAS agent. He noticed that some bank fee transactions had not been included in a business activity statement he had prepared and lodged for his client, Sam. So this resulted in false or misleading statements being made to the ATO. While the omission of this information meant the statements made in the BAS were false or misleading, Jake considered the false or misleading statements made were immaterial. So Jake did not take further action on this. So the question we're asking here is, has Jake complied with his obligations under Section 15 of the determination? And we have 3 options for you to choose from, which are yes, no, or unsure. So I've just launched that. I can see that people are putting through their responses now. So I'll give you a couple of seconds to do that, and then we'll come back and we'll share the results, and we'll get Peter to explain what the right situation would be here. I've still got responses coming through, about 52%, so I'll keep it open a little bit longer, give you a bit more time. And I just noticed a couple of questions coming through about attendance certificates. We will issue those after the webinar today. So everyone who stayed online for the session will get an attendance certificate as well. Okay, so I'm going to close that poll off now. I'm just sharing those results, so they'll come up on your screen. Peter, hopefully you can see that, but what we've got is about 25% of people think that Jake has complied with his obligations under Section 15. We've got 62% saying they're not, that he has not, and then 13% are saying that they're unsure. So over to you to let us know what the correct answer is, and thanks for participating, everyone.
Thanks, Julie. And I think this is a good example that there will be some grey areas in people's interpretation. Our view of this is that Jake has taken the right actions here. Firstly, he's given proper consideration to the issues around the emission of a couple of bank feeds. He's looked at the information that was in those bank feeds in terms of lodging a BAS. He's decided and made a specific decision that the information that wasn't included was in fact immaterial. So he's made and documented his decision not to take any further action. So in our view, Jake has complied with his obligations under Section 15 of the Act. The thing I do note is that one thing he should do is make sure that the information that was omitted is included later when finalised accounts are done and when tax returns are going to be lodged. But in this instance, it was clearly a few minor matters that were immaterial. So we're comfortable that Jake has met his obligations.
Excellent. Thank you so much for that, Peter, and thanks for the presentation as well. So we might move on to our panel conversation now. So I'd just like to invite Jeanette and Tariq to join us. And Jeanette, I might fire off the first question to you today. This one's come from Rob, and Rob is asking if we can expand on the concept of know or ought reasonably to know. Rob's just saying that this seems extremely broad. So if we could just have a little bit more information on that, that would be really helpful. Thanks.
No worries. Thanks, Julie, and thanks, Rob, for that question. It is a really good question. It's one which is obviously not unique to this particular obligation under the Code Determination. It appears in many parts of the Taxation Services Act, as well as other provisions in the taxation law. And maybe before I get to that question, I might just do a little bit of a quick refresh, because the reason why this phrase is so important is that a tax practitioner under this provision must not prepare a statement that they know or ought reasonably to know is being made to either the TPB, the ATO, or another government agency. And they also need to ensure that the statement that they're making or being prepared or preparing is not false or misleading. So that's sort of the basis for why we look at ought or know or ought reasonably to know. So a bit of a mouthful. So look, I think the word know is, everyone knows what that means. It basically refers to actual knowledge. But where it gets a little bit, I guess, less clear is the phrase ought reasonably to know. Now, really, in its simplest form, we would say that you need to consider whether a reasonable person with the requisite expertise in the same position would know that something has occurred. So in this case, we look at a registered tax practitioner. And we need to consider that really in the context of the obligations under the TASA. So there are obligations in relation to competency, taking reasonable care to ascertain your client's state of affairs, apply tax laws correctly. So putting that all together, it really is whether another registered tax practitioner would know that a statement might be misleading or false, as well as when making a statement to the HOTB or another government agency.
Thanks so much for that,
Can I
Jeanette.
just jump
yeah,
in?
sure, Peter, go.
And, Julie as well, and Jeanette, one of the things that we talk about ought reasonably to know, so all practitioners have an obligation to provide competent services to their clients. So part of competence is to actually review the source information that's provided by their client. So to understand the information that client provides and to use that information in the preparation of a return. So if you don't consider the information that you've got and don't see something in that information, there's something that you probably should reasonably ought to have known because it's been information that your client's given you. So I think it's about, this is whether you should know something is about the level of competence that you are using in conducting your day-to-day practice.
Thank you for that, Peter. That's helpful. Tariq, I might ask the next question of you, and this one's about reasonable period of time and just asking if you can explain what that means exactly.
Yeah, thanks, Julie. Good question. There's no set or fixed time for the answer of what is a reasonable period of time. You have to look at a variety of factors, and in our information product, we do list some of those factors to inform your decision. And some of those are the nature of the statement, the circumstances of your particular client, the details that were actually false or misleading, how long ago the statement was made, if there's a relevant review period attaching to the statement, any time frame in the taxation law for lodging the statement or correcting it, or any other relevant matter. So to look at probably those factors holistically, and then you make an assessment as to what would be an appropriate time.
Thanks, Tariq. I've got a question from Andrew now. Peter, I might put this one to you. It's about materiality. And Andrew's asking, is there a definition or is this just a matter of opinion? So could you give us a bit of information on who determines if a statement is material, please?
In the first instance, it's the relevant practitioner who should determine the materiality of the matter. And there are all sorts of accounting related definitions of materiality, but it's really a conceptual thing that relates to the individuals and the circumstances that are involved. So quite clearly, we used an example previously about missing a couple of minor bank feeds of some small amounts, not material. But what's material to one taxpayer might be immaterial to a much more wealthy taxpayer or a larger corporate. What's material to government is a larger number than what might be material to a salary and wage taxpayer. So what we're looking for is for tax practitioners to use their own judgment and to consider the relevant factors of the circumstances of the parties involved and what a significant or material matter is to those parties. So as I say, different for a salary and wage taxpayer to a major corporate or a government. So we're looking for practitioners to be the ones that make the initial assessment.
And thanks for that, Peter. If I could add to that, Julie, I think it's a really good point because I know that many practitioners might be frustrated that there's no sort of clear black and white answer, whether it's materiality or Tariq's earlier question in relation to reasonable time. But what that ultimately actually gives you is greater flexibility because it allows you to adjust for your individual circumstances. So maybe another way to have a look at that sort of broader definition. It is beneficial, I feel.
Thanks, Jen. I think that's a great point. Sorry,
yeah.
Peter, you go. Yep.
Yeah, I also think, what we want practitioners to do is if they find these circumstances being considered, just do enough to make a note of what what your considerations were, so that if it becomes an issue, we can see firstly that you considered your obligations, secondly what factors you considered, and thirdly what decision you reached. And that's in the vast majority of cases going to cover off any concerns that we have.
Thanks, Peter. I've had a few questions around dobbing in clients. So, Tariq, I'm wondering if you could give us some information on whether tax practitioners have to dob in clients under the false or misleading obligation, please.
Yeah, sure, Julie. So I'd probably rephrase the question. It's about reporting your client under the false or misleading obligation and notifying the TPB or ATO, but that notification obligation is only triggered in specific circumstances. So the obligation to report a client will only apply if all of these factors are met. There's a false or misleading statement that has been given to the TPB or ATO, so the statement must have actually been given to the board or to the commissioner. At a time after the statement was made, the tax practitioner had reasonable grounds to believe that the statement was either false or misleading in a material particular, and that could be by omission as well. So if it's false or misleading in a minor or trivial matter, it doesn't trigger the obligation. It has to be in a material particular. Then the tax practitioner has to have reasonable grounds that the false or misleading nature of the statement resulted from recklessness or intentional disregard of a tax law. So that's another element that has to be satisfied. Then the tax practitioner made or prepared the statement, or permitted or directed someone else to make or prepare the statement for a client. In addition to that, after a reasonable period of time, after advising the client that the statement should be corrected and possible consequences, the tax practitioner is not reasonably satisfied that the client has corrected that statement or otherwise explained the basis for it. So you're giving the tax practitioner an opportunity to correct it and or explain the basis for it, and they still haven't done so. Then after all that, if the tax practitioner has reasonable grounds to believe that the client's actions have caused, are causing, or may cause substantial harm to the interests of others. So, for example, investors, creditors, all the people that Peter spoke about before. So there's 6 elements there. All of those have to be met before you ever have to report a client to the board or ATO. So I hope that provides some certainty around the obligation and the parameters of when it might actually apply.
Thank you, Tariq. That's really helpful. The next question I've got here is about does this obligation apply to all false or misleading statements? So, Jeanette, maybe you could give us a response to that one.
Sure, thanks, Julie. And look, I have tried to change my mic, so hopefully it's a little bit clearer for people in the webinar today. So, no, it doesn't apply to all false and misleading statements. And I think this goes back to our earlier point around materiality. So it really does depend upon the nature of the false or misleading statement. It isn't seeking to cover those sort of trivial, inconsequential type issues. So another element of what how this obligation applies is you've got to look at what actually has given rise to the false or misleading statement. So where it's arisen because there's been a failure to take reasonable care, for example, recklessness or intentional disregard, in those cases, when you do report, you have that obligation there to withdraw your services. But in situations where it's due to recklessness or intentional disregard, or you think that there is harm being caused, then in those cases, you've got to consider some further obligations. And they're the ones that sort of Tariq ran through earlier. And maybe if I can just sort of emphasize that point that Tariq was making, this obligation isn't about dobbing in your clients. It is about, enhancing the tax system, the tax profession, making it a level playing field for all tax practitioners out there. And there is a very, very high bar that has been set before there is an obligation for a practitioner to notify the ATO or the TPB about their client's affairs. So I really want to make it really clear. It's for those extreme cases, not your day-to-day inadvertent, I'll call it, mistakes.
Thank you, Jeanette.
Julie, can I just I want to add a couple of things. I notice in reading some of the comments on the chat, there's some comments about whether, agents, BAS and tax agents are expected to be the auditors of their clients and those sort of things. And I really want to clear up that we're not expecting you to go to an audit level standard. And, reasonably no or reasonably no is about, as I say, understanding the working papers and the client records that you've got. And I think, intentional disregard or recklessness, you might have a client that comes to you and from, lodging their BAS statements and doing their work, that they've got a fleet of 5 or 10 cars. You might say to them, where are the logbooks? And they say, oh, mate, don't worry about it. Everybody knows we don't need, all my mates at the pub are doing this. That's getting close to intentional disregard of the tax law when your client's just saying, you don't worry about it, mate, everybody else cheats on this. So that's a set of circumstances where you've done the right thing. You've seen through the records that you're working with that there's an issue. You've asked the client about it, and they're just waving it off. Let's not worry about that. Everybody else does it. Now, and Jeanette's mentioned the, strengthening the integrity of the profession. The problem that I know practitioners have is if they start pulling their clients into order a bit on being reckless with their records or disregarding some parts of the law, there's a practitioner down the road that won't pull them in a line. What we're hoping to achieve through these is to make it easier for you that are doing the right thing so that there's not another practitioner down the road that'll just wave it through. By getting this right on the big things, you'll have a bit of backup to say, no, you can't just disregard the law, otherwise I've got these responsibilities. So we're genuinely hoping that by dealing with the material false and misleading statements, it helps you to have a proper professional relationship with your client and doesn't create that incentive for them to go to the lazy one down the road or let them get away with things.
Thank you for that, Peter. I just wanted to ask now about how a tax practitioner assesses what is in the public interest. Would you be able to speak to that, please, Peter?
Surely, and I think there's a range of things, but we might look at the promotion of tax schemes or inappropriate R&D claims. We might look at those systemic issues where people are saying, well, everybody else does this and I'm not doing it. So I think what's in the public interest is to make sure that registered practitioners understand their place in the system and use these provisions for serious issues to help us make sure that everybody is in a reasonable state of compliance with the system. It's no good, it's no good when that there's a significant business down the road that's competing with other businesses that just does everything for cash, or that there's a practitioner that is touting for business in the local business community on the basis that they'll help you push through R&D claims for things that aren't really R&D. And what we're really trying to achieve through this is a set of circumstances where material risks either to the revenue or to the appropriate behaviour of people within the system are flushed out. And equally speaking, unregistered tax practitioners are a serious threat to the whole of our profession because, they compete with you, our registered practitioners, on an unequal footing because they don't comply by the obligations of the code. They don't pay PI insurance. They charge lower fees because they're not doing the sort of work that you're doing, and they're putting their clients at risk because they're probably not as skilled and they probably don't do their CPE that you're all obliged to do. So really what we're saying is let's flush out these things that are material or significant risk to the system. And that's for the benefit of the system. It's the benefit of you, the registered practitioners who are doing the right thing. And it's very much to the benefit of the clients, the taxpayers who are coming to you for assistance in what we all do understand is a reasonably complex environment of tax, GST, superannuation guarantee contributions, and all the things that you're skilled and trained and continually educated to deal with.
Thank you, Peter. Tarek, I've got a question now about the breach reporting obligations, which is another new obligation that tax practitioners are sort of learning about at the moment. And this one's just asking, how does this obligation relate and operate with the new obligations under false and misleading statements? If you could let us know that, that would be really helpful.
Yeah, thanks, Julie. So the breach reporting, obviously that's a separate obligation where you have to report significant breaches of the Code of Professional Conduct in your capacity as a registered practitioner, or if you've noticed that another practitioner has done that. So in some cases, where you make a false or misleading statement as a practitioner, it may also give rise to the breach of the code, and therefore it might trigger the breach reporting requirements as well. If it does, obviously you'll need to report that to the TPB, and there's mechanisms for that which are available on our website. I understand Julie will be sharing a bit more information on the breach reporting following the webinar.
We will, absolutely. Thank you for that. Okay, next question I might give to you, Jeanette, and this one is, does the obligation fall to me if I have an employee who has prepared a false or misleading statement?
This is a fairly simple one, hopefully. The obligation falls on the registered tax practitioner. So if it's the firm, the practice that is actually providing the services, it falls on the practice, not necessarily the employee, and definitely not the employee where they are not registered with the TPB.
Great, thank you. Now, I've had a few questions in relation to the case study. So, Tarek, I might put this one to you. And it was about the BAS agent. And a lot of people have asked, couldn't you just amend the BAS itself and not then have to report?
Yeah, thanks, Julie. I'd probably have to refresh on the example again, but in the context of just amending the BAS, provided that there is mechanism to do that and you're within the statutory timeframes to amend the BAS, you could do that. Now, even if you did amend the BAS, if it still gave rise to a false or misleading statement, that doesn't take care of that obligation. That's still a standing obligation in relation to the false or misleading statement. So if the statement has been made, it's false or misleading, and it's required to be reported, that obligation will stand. Now, if that has been rectified via it being amended, then certainly we'll take that into account in any compliance action, if any.
Okay, thank you for that.
And I'd really emphasise that the first, if you know you've got the BAS wrong, amend the BAS. Do the right thing. Make the report. It's a pretty simple matter. You simply sit there and report to us that there was an error in the BAS. It was material. We fixed it. Here are the details. Nothing to see here. Then, if it gets reviewed by the TPB, we'll be able to see an honest practitioner who's realised an error, amended the BAS, made the report, and it really is tick and move on. Unless, the only circumstances where there would be anything to see there might be if there was a really major issue of, recklessness or disregard by the client that led to that. But you're really sitting there saying, you've done all the right things, so we'll be able to deal with that report really quickly and really easily.
Well, Julie, if I can just jump in, because I am reading the comments in the chat.
Yeah, go for it, Jeanette.
And, there is a lot of concern, and I understand that, there are new obligations on the way. Maybe we might just step through this obligation again, just so we get a bit of an idea around it really is for only really those extreme circumstances. So, as a starting point, the prohibition is that, you can't make statements which or ought reasonably to know are false or misleading. I think, materially. I think we can all subscribe to that and agree that that's the right prohibition. Now, where that has occurred, there are some requirements now under this new code determination to rectify that situation. And I might just sort of walk through that in that kind of ramped up style. So as a first step, if you prepared or made that statement and you reasonably believe that it's false and misleading, and it's arisen because of a failure to take reasonable care or recklessness, or there is intentional disregard, then the consequence or the impact is that you've got to advise your client of that, and you've got to advise that the statement should be corrected. I'm hoping that in most cases, once you notify the client, they will go ahead and correct the statement. Where that occurs, that's the end of the story. Now, in those very small situations, hopefully, where the client does not correct that statement and you're not reasonably satisfied that they have corrected that statement, then you've got to withdraw your services. And I would imagine as a practitioner, you probably don't necessarily want clients on your books that aren't willing to correct false or misleading statements. So that's sort of the element of also protecting, I think, your practice and your business. So then lastly, what happens is that where you've got reasonable grounds to believe that the client's actions of not correcting are going to cause substantial harm, or there is a public interest, then you have to take a further step of either notifying the ATO or the TPB, whoever it may be. So I'm hoping that that explanation sort of walked you through to say that it really is very limited to situations where the client isn't willing to correct statements, and there are elements, as Peter said, around recklessness or intentional disregard that trigger these further steps.
Yeah, can I jump in as well, Julia? Reading some of the comments, you clearly don't need to do a false and misleading statement report on every time you amend a BAS. And I want to go back to a real life example from quite some time ago when I was a young practitioner, but I was engaged to assist a person who had a tax audit, and they had a real problem. But their problem emanated, the person was a restaurateur. They ran a pretty successful restaurant. Their tax returns got lodged and they claimed tax losses every year. But the problem emanated from the fact that the restaurateur used to give the accountant the bank statements and the credit card records, but he didn't tell the accountant about any of the cash, because what he used to do was he used to pocket all the cash, and he'd pay himself out of the cash. He'd pay his perhaps his wife who was working in the restaurant, and he'd go to the fish market and the vegetable market and things, and he'd do all of those dealings in cash. Now, he hadn't told his accountant about any of that, but I also was sitting there thinking the accountant should have known better. Now, when we went through this whole audit process with the ATO and we reconstructed all of the restaurant accounts, it turned out that the result was within a 0.5% of the ATO's standard benchmark for a restaurant. So that's a set of circumstances where the client was claiming $50,000 or $100,000 of tax losses in their return because they were getting 50 or 100,000 plus in cash that they weren't putting in their tax return. That's a material false and misleading statement resulting from disregard of the tax law. That's a big thing that we're talking about. We're not talking about, oh, look, one of my staff missed one of the bank feeds 1 month, So we're really trying to make the point that we're looking for real problems, not your day-to-day mistakes.
Thanks, Peter. I think that's quite helpful to hear that real life example. I think that's always a good way to put things into context. I've got a question now from Luke, and Luke is a BAS agent, and Luke's wondering what the responsibility is for the BAS agent to notify the ATO if they think that a client is claiming personal expenses as a business expense. Luke's question is, should I just leave that to the tax agent, or does he himself need to deal with that as well as the BAS agent? Sorry, maybe Peter, if you want to take that one.
Yeah, in the first instance, Luke, I think it's really important to have a look at the materiality of it. So if your client was perhaps had a couple of kids at private school and was running $20,000 or $30,000 worth of private school fees through their business and just hiding it in repairs and maintenance or something like that, then I think that's a material issue that Luke should put in. If it was things like some tea and coffee and biscuits that he thought that Luke sort of thought, oh, maybe he's buying a lot of tea and coffee and biscuits and milk and taking some home. You're sort of sitting there. That's a bit of a less significant, more minor issue. So, Luke could be at his best interest to make sure that he talks to the client and says, are you really sure all of this, is going through your business and is not your personal expenses because of the risks? But I wouldn't need to do much more than that. So I think it's about assessing the significance or materiality. If Luke knows that the client's partner doesn't work in the business but is charging the lease and running costs for a Mercedes four-wheel drive through the business and not paying FBT, then I think you've got something that needs to be reported.
Thanks, Peter. Tariq, I've got a question now from Julie, and Julie's asking, do we need to advise clients of the need to report them if you do notice that there's correct information and it's a substantial issue that they need to report?
Thanks, Julie. So if there is a false or misleading statement has been made and you need to notify the client to correct it, you obviously do have to notify them that it should be corrected. Now, if they don't correct it in those circumstances, and all of those other 6 elements that I earlier spoke about have been satisfied, then you have to report the matter to the tax office or the TPB. In those circumstances where you have to report the matter to the tax office or the TPB, the law does not require you to then notify your client also of that report.
Great, thank you. I've probably got time for one more question, and then I might go to each of you just to give us a little wrap up and summary of today. So, Jeanette, I'll ask the last question of you, and this is just asking if we could provide a little bit of detail on the difference between failure to take reasonable care and recklessness.
Sure. Look, I probably won't go into great detail with that today. These are concepts which are also administered through the ATO. But a reasonable care is a lower threshold than recklessness or intentional disregard, and we have a lot more. Guidance in our actual information sheet, but it's just that sort of different levels of input or perhaps turning a blind eye.
Okay, thank you. Thanks for that. Tariq, do you want to just give us any last thoughts from yourself today?
No, I just probably reiterate that the obligation has a number of elements. Obviously, as Jeanette spoke about, on the main, the prohibition is you don't make false or misleading statements, and particularly ones that are material. The obligation then to actually go that further step and have to report yourself or the client, it's going to be very rare. There are 6, 7 elements that have to be all satisfied before you ever get to that step. So just wanted to make that very clear that the obligation to report will only arise in the very limited circumstances.
Thank you. And Jeanette, over to you.
Thanks, Julie. Look, just only thing I would add is there have been a few questions around if you are in the situation where you do need to notify and report, how do you do it? From a TBB perspective, we have a facility on our website through the Notify Change in Circumstances form, which all practitioners would have access to. And we do know that the ATO is also working on a form at the moment to facilitate this. And I guess that sort of relates to another question that's coming up quite often around when this starts. Peter canvassed it earlier. It has already started for those large firms, but for the vast majority of practitioners, which are not large firms, it doesn't start until 1 July of this year. Thanks, Julie.
Thanks, Jeanette. And Peter, last words from you.
Yeah, I'd really like to round out by saying, over the last year, I've spent a lot of time thinking about these topics. And one of the things I've thought about is, my own 30 years in private practice as a tax practitioner. And I can honestly say that having done that, I reckon I could think of less than a handful of times in my private practice experience where I think I would have had to have made a report about a false or misleading statement. Okay, in relation to how our clients behaved, I think most of you as practitioners have a good understanding of your client base. You have a good understanding of who they are and how they behave. And I think you would have, it would be quite rare where you would have a set of circumstances where, false and misleading statements are so material and so significant, and the client is so resistant that you would have to make a report. And from time to time, you might make a mistake yourself. But when you discover that, generally, my experience is that most people just want to remediate that mistake as quickly as possible and get on with life. So it's one of those cases when if you mess up, fess up, get it sorted out and move on. That's the way forward.
Fantastic. Thank you for that, Peter. Just to finish up, I'll just share a little bit of information on how to stay in touch with us. Obviously, our website is a fantastic resource. That's tpb.gov.au, so we encourage you to go there. You can also follow us on LinkedIn and Facebook. We have the most up-to-date information available for you there. And you can also subscribe to our YouTube channel. And as I hope everybody knows, we do record all of our webinars and have a great comprehensive library of those sessions available there, and you can view those at your leisure, and you can still claim continuing professional education as well for viewing those online. We also have our TPB e-news, which goes out each month, and I highly encourage you to subscribe to that if you don't already. And I just wanted to say a big thank you to Peter, Jeanette, and to Tariq for sharing your insights with us today. And thank you to Fiona and Vishnu for assisting with the questions as well. That was really well done. Thank you both for that. So yes, thank you for coming along today. And as we've said, it does count towards your continuing professional education. You can claim 1 hour for attending, and we will be issuing everyone with an attendance certificate that will come out in the next couple of days. And then just finally, before we finish up, I will launch an exit survey, and we would really appreciate it if you could take the time to complete it. It's very quick, only takes a minute of your time, but it is really helpful for us to hear your feedback. And also, if you have some topics that you'd like to hear from us on, please let us know, and we will endeavour to add those to our calendar of events. So that survey just pops up in your browser when you leave the webinar today. So once again, thank you so much for attending our webinar today, and we hope you enjoy the rest of your day, and we'll be talking to you soon. Thanks, everyone. Bye.